Good evening, class, and welcome to our taxation class for today. Our topic for tonight is taxation of business and investment income. We will be focusing on company income tax. Now, what are the things we stand to gain for today? The purpose of this topic is to help us appreciate the purpose for assessing a limited liability company to tax, know how a new and a seasoned business are subjected to tax, and to know how a company is changing its accounting date is being treated. Then we'll be looking at the meaning and importance of basis period and year of assessment. We appreciate income and profits that are chargeable to tax in Nigeria. Then we'll be looking at the treatment of dividends and other investment income. Then perhaps appreciate profits and gains that are exempt from tax. Now, this class might not be one straight class. It might be broken down into two or three classes, depending on the way we understand. So there are certain things here that we will not be talking much about because they are not more important in this topic. Now, the authority that enables the federal government to impose and collect taxes in Nigeria is the Federal Republic of Nigeria. They collect taxes from the citizens of the Federal Republic of Nigeria. And the legal framework that gives them that authority is the Constitution. So when they say this is in the Constitution, it means that the government has the right to impose what is written in the Constitution. If it is not in the Constitution, it has not been provided for. Then we have taxes and levies approved for collection. Now we have companies income tax, which is collected by the company and federal inland revenue. We have withholding taxes on companies, FCT residents and non-residents. Later, we will tell you the meaning of non-resident. So non-resident, let me just say that for now, are those who do not reside in Nigeria, but they have dealings to do with Nigerians. Then we have the petroleum profit tax, we have the VAT, the value added tax, the special education tax, and the capital gains tax for companies and non-residents. Then we have the stamp duties on companies and non-residents, and we talk about the personal income tax for people in the armed forces and the staff of the Foreign Affairs Ministry, and as well non-resident individuals. So these are some of the taxes that are being collected. Now we want to go straight to identification of a company. How do we identify a company? It's just like saying, how do we identify a student of ICANN? A student of ICANN is identified by his what? A registration number. So it means that if you want to identify yourself that you are an ICANN member, they will ask you, what's your registration number? And they will check the system and they will cross-check with the name you supplied and they say, oh, that's fine, you have been identified. Now, what about a company? How is a company being identified? We have something called the tax identification number, which is TIN. That's one thing. Then we have the ROC number, which is the the registration registered company's number, which is called the ROC number. That is the number that is given to companies from CAC when the companies are registered. Okay, so then you identify them for identification purpose in CAC. But when it comes to tax purposes, you have to identify them with CAC and with the tax identification number. So it's not enough to have your RSA number. You also have to generate your tax identification number from the FIRS so that you can be identified and profiled for tax. Now, this is what will be used by every other people to do business with you. Sometimes when you want to provide documentation for your company, you want to serve as a vendor, you want to be a supplier, you want to go into contract, you need to identify your company with the ROC number with the tax identification numbers. Now, what is a trade or business? Now, when you are registering your company to do business, sometimes the clauses will be when you are writing the objects of the business. You will say the object of the business is to carry out so and so kind of business. Or maybe you say to carry out the business of trade, supplies, buying and selling. Some will say to carry out the business of general contracts. Some would say to carry out the business of operating a hotel, to carry out the business of farming. These are object clause that is to be put in your memorandum and article of association. Now, this determines what the business activities are. Sometimes some people will be carrying out different kinds of activities. And so the CSA will tell you the principal activity is what will be in your certificate. So it means that some people will be carrying out different kind of business like buying and selling. Some will say, okay, they will do general contract. They will also that same business they want to do salon inside or hairdressing, fashion design inside one business. They are also doing POS and also contracts. So they are having different scattered businesses, but the principal business clause is what is written in the certificate. And so the business is registered to carry out one form of business or the other. Now, when a trade or business may include manufacturing, all kinds of manufacturing. It could be manufacturing of soap, manufacture of beverages, manufacture of cement, anything, even that of bread, food items. These are manufactured. They could also be um, into just trading. You're not producing anything, you're only buying and selling. You could be a wholesaler, you could be a retailer. You can also be pursuing service. This is still business. So all of these are forms of trade that is also being registered. Now, one thing that you are doing when you register your business is you want to make profits. But some business are registered not for profit making, but it means that whether your business is registered for profit or not for profit, beg your pardon, when your firm is registered as a company engaged in profit making or as a firm engaged in non-profit activity, then you will have to get that two identification form, ROC number, and TIN. So neither the absence of a profit-making motive will prevent your income to be subjected to tax. Now, we come to the crux of the matter, basis of assessing companies to tax. Now we look at what we call basis period. Basis period, basis period, we underline that. This is basis period. What does basis period mean? It is defined, it's a defined period of time in the life of a company. A defined period of time. So it means that when something is defined, it has a start time and an end time. So when the time, we know the starting point and we know the that in accounting generally it is that defined period is 1 year, 1 year of the business. So it means that the start of the year is the start of the basis period, and the end of the year is the end of the basis period. So that means that how do we know the period that an account is based on? We look at the account that is being prepared. The last day of that period is being referenced with relations to that account. So it means that if the profit statement is being referenced, you will say profits for the period ended. It is that defined time we are looking at, that is the basis period for the period ended. So that period is a 1 year period normally. You want to look at the balance sheet, you will say for the year ended, or for the assets, not for the year ended, uh, financial position as at a particular date. It's still talking about that 1 year period, the ending date. Then cash flow statement is for the same period. So you see here, that period in which an account is being prepared is the basis period. Now, it is that account that is being subjected to tax. So it means that the period of preparing that account is the basis period for that account. Now, what is year of assessment, also called the tax year? Now, year of assessment is any year, fiscal year. When we call fiscal year, that is government financial year, fiscal year, or calendar year. So let me write it down here so that for emphasis. So year of assessment, which we also call YOA, or tax year, which is called TY, is also called calendar year. It's also called fiscal year. So these are the ways you can see me writing them. YOA, TY, SCY, FY. And it runs from January 1 of that year and ends with December 31 of that same year. So it's also a defined period. The year of assessment is also a defined period that starts from January 1 to 31st December that same year. So it means that right now we are in 2025, we are in 2025 fiscal year. We are in 2025 government financial year. This is because when government is planning out their budget runs from January to December. It doesn't run from any other date to another date. It cannot be running from March to, you know, to, to, to February. Even though, like in Nigeria, a new government takes power in May 29, the previous government would have planned budget for the whole of that year. The person that comes to power likely is going to manage the budget for that year and prepare his own first budget that will start the next year. So, government fiscal year is the year of assessment. Now, the thing is, companies year, companies year, companies, companies account, accounting year, and government, government fiscal year. They don't always coincide. What do we mean? Government fiscal year is always from January 1, let's say X1 to 31st, 31st December X1. Now, that's government fiscal year. Then the financial year, company's financial year may also run on the same dates. So it means any company that starts and ends their accounts in December 31st is using government financial year. But some companies will say, no, I want to choose a different date from government fiscal year. And so you might see people starting, say, September 1, September 1, let's say X1, and to end in 31st August X2. Somebody might say, okay, I want to choose July 1 of one year, ending in June 30th of the following year. Another will say, I want to start from April 1 of one year and end in March of the following year. So, in all of these examples, it must be one year, one full year, whether you are following government fiscal year or you choose anyone that suits you. This is one full year. So, basis period, I will later tell you why it is called a period, because sometimes it may be longer than 1 year or shorter than 1 year, but the standard is 1 year. But when we say the year of assessment is always 1 year, so that's that. Then let's see something which is very important, the preceding year basis. Preceding year basis. Now, let's understand the meaning of precede. When I say precede, it means comes before, comes before. So when I say January precedes February, it means that February comes before February. So when I say June precedes July, it means June comes before July. When I also say 2024 precedes 2025, it means the year 2024 comes first, 2025 follows. Now, what do we mean by preceding year basis? So, when you want to tax a company, the government will come to access the company to tax on the tax year. So, when the company comes now, the company is coming on the tax year or fiscal year. Now, as they are coming to tax the company's account, they will not check that same year in which they are coming to tax. No, they will look at the year that came immediately before the tax year. So it means they are looking backward to the basis period that they will be looking at is the preceding year basis. It's preceding year. It's preceding year. So it means they will look at the company's year end that is ending on the preceding year, which means that, to illustrate, we are in 2025. Government cannot come in 2025 and be asking you for your books for 2025. They have no business with 2025 because 2025 is still ongoing. It means that the latest or the most recent account they must ask for is 2024. So it means 2024 precedes 2025 in which we are. Government is here now asking for your books, and they say, give us for the preceding year. You are bringing your books ending in 2024. That is what we call preceding year basis. It is just like people who are using postpaid meter. Okay, so you the NEPA people or the electricity distribution people will come into your building to come and read your meter. So they will read the meter probably at the end of the month or the beginning of the new month, and we are in January. They will give you a bill and they will call it January bill, right? Because it was brought in January. That is the month of assessment. But if you look at it, the period of billing, the billing period will not be January because we are still in January. They will be billing, sorry, they will be billing you for December 1 to 31st. We call that preceding month basis. So they bring your January bill, but you are paying for what you consume in December. The same thing, government comes to tax you in January or in 2025, but they are taxing you for the profit or the activities you did in 2024 accounting year, depending on which accounting year the company is using. Whether they are using government fiscal year, it means that the accounting year is ending in 31st December 2024. If their own accounting year is ending in August 31st, it means that the account they are looking at will end August 31st. Nothing concerns them from September 1, 2024, because that is not the account they are looking at. But they are going to be looking at the account ending in August 2024 and that 1 year backward, meaning it will start from September 1, 2023 to August 31st, 2024. That is the preceding year basis. Now, if you understand this concept, you have understood a fundamental concept that will help you to solve many tax problems. Preceding year basis is the key. So it means that if this is the tax year, so we usually say year of assessment, let's say it's 2025, the basis period, the basis will be, the basis period is defined period, which is 1 year, and the basis will be preceding year basis. Preceding year basis. So it must end in 2024. Any date ending in 2024 qualifies it for preceding year basis. Okay, so now let's go to actual year basis. Actual year basis is the basis period that coincides with government fiscal year. That means it runs from January 1 to December 31st of every year. Now, let's get something right. Preceding year basis can run from January 1 to December 31st. But when we say actual year basis, look at what we mean. We have year of assessment 2024, right? And we now say basis period is January 1, 2024 to December 31st, 2024. Now, this is different from when we say year of assessment 2024, and we now say basis period, we now say January 1, 2023 to December 31, 2023. Now, this two is different. This one is preceding year. But one thing is common, both of them start from January 1 to December 31st. So the fact that it starts from January 1 to December 31st does not make it actual year basis. What makes it actual year basis is the year of assessment is 2024. The basis period starts in 2024 and ends in 2024, and it must be January 1 to December. In fact, it must be 2024. So the two dates are in 2024. But when it is coming from 2023, it is preceding year basis. In fact, when we look at the ending date is what even most important. The ending date is preceding the year of assessment. That makes it a preceding year basis. But now, if you look at the ending date, it is the same year with the year of assessment. It makes it actual year basis. So we should know that for now. Now let's look at normal basis period. Normal basis period, we said it starts and ends in a defined period, which is normally 12 months. So any basis period that is 12, exactly 12 calendar months is normal, be it preceding year basis or otherwise. It is a normal basis period. Okay, so um, there are three things that makes a basis period normal. There are three things that makes a basis period normal. I will itemize them now here. So take note of them. Number one, a normal basis period is made up of 12 months. So 12 full months. So if you see any period that is 11 months, 1 month, 13 months, 15 months, 23 months, you can see period like that. You may not see 24 months. You may see 23 months. You may even see 18 months. You may see 13 months. You may see 11. You may see 1 month. These are not 12 full months. So only 12 full months period is a normal one. So this is one of the criteria is going to achieve. Then the second criteria is that it will start immediately after the previous period. So it means that just like a runner running a race, a relay. So when the first person runs, it gives the second person the baton to continue the race. So as he's collecting the baton, it is starting where the former one has ended. So it means that it must start where the previous ends. So what it means here is there is not going to be gap. There's not going to be overlap. So I will say no gap, no gap or overlap. What do we mean by gap? Now, let's say a basis period ended in um, September. September, let's say a period ended in September 2024. Now, normally, the next period after that should start from October 1. But maybe for some unexplained reason, the or for some reason known to them, they want to change their period to start from January 1. And so what happens to October, November, December? There's a gap. So a period cannot end in September and the next one is starting in January. That is normal. That is not normal. It is abnormal. It is abnormal. So when there is a gap, it is abnormal. Now, what about overlap? Now let's say your business is normally ending in March every year. Let's say one of them you started from 2023 April 2023 to March 2024. That's one full year, right? Now, the next period supposed to start from April, so they must have the same starting period and ends the same ending period. But now, for some reasons best known to them, they now say no, this 2024 we will start it from January. So what have you gained now? It means that there is an overlap between 2023 period and 2024. What is the overlap? Both of them will have January, February, and March in their period. So this three period, the three ending period for 2023 and the three starting period in 2024 are overlapping. It means the income will be charged twice. And this is an overlap. For normal basis period, there shall not be gaps and overlap. Whenever you see gaps and overlap, it is not normal. Then the third thing is it must be the only account ending in the preceding year. It must be the only account ending in the preceding year. Now, what do we mean? No two accounts should end in the same year. No two accounts should end in the same year. If one account ended, let's say you usually make your account to March, and let's say for 2023 to 2024, it ended in March 31st, 2024. And you now say, oh, I want to change my account to December. And you now do another account and it ends in December 31st, 2024. You have two accounts ending in 2024. That is not normal. That is not normal. And so, for a normal basis period to work, three things must be there. It must be 12 full months. It must start where the previous one ends, having no gap and overlap. And it must be the only account ending in the preceding year to the tax year. So having learned that, it's found out that most times we'll have a normal basis period. If your business is an ongoing business, if you have been doing business for years, you notice that your account is prepared in a particular year end. You're always having a consistent basis period, and which is good. It's a normal basis period. But there are times that you will have abnormal basis period. And there are three situations that will give rise to abnormal basis period. Now, what are these abnormal basis period? These are either accounts that are more or less than 12 months, and it may not start immediately after the previous year end, and may have two accounts ending in the same preceding year. Now, there are three situations. I call them the three C's. Three C's where you will have abnormal basis period. So the first C is commencement of a new trade. When you are starting a new business, even though you start this business from January 1 and you decide that you want to prepare your accounts to 31st December, you might have achieved 12 months. But it is not starting from where a period stops. Where is it starting from? It's January 1. The previous period, there was no previous period. And so it contravenes point number 2. That's where the previous period ends. So there was no previous period that is ending anywhere. It is just starting. It is abnormal. Even though it passed number 1, it has contravened number 2. And it may be the only account ending in the preceding year. No problem. But it didn't start where any previous period ended. Now, cessation of business. Cessation of business is the second C. It is not compulsory that your business will start or cease on 31st December. Sometimes the business might cease in the middle of the year. We will see example of what makes cessation of business as abnormal, because you may not have 12 full months. Even though you have, it starts where the previous one ends, it may not also be the only account ending with the preceding year. But note that it may not have 12 full months. Then the major culprit among them is the third C, the change of accounting date. This is where you will see overlap and gap. Very well overlap and gap. It may have 12 full months, fine. It may be it may be the only account ending in the preceding year, but in this third one, you will see gaps and overlap. We are going to look at them and we are going to see why they are abnormal and how do we follow this abnormality and make them normal in the long run. All right, so let's go further. Let's look at basis period on commencement of business. Now, we started with the first C, basis period on commencement of business. Now, Section 29, subsection 3 of the Companies Income Tax Act provides that the assessable profit of any company from any trade or business, or in the case of a company other than a Nigerian company, let's ignore that. I'll start again. Section 29, subsection 3 of CETA says that the assessable profit of any company from any trade or business for its first year of assessment and the 2 following years of assessment, which are in this subsection referred to as the first year, the second year, and the third year shall be ascertained in accordance with the following. Now, take note. How is the first year being assessed? For the first year, the assessable profit shall be the profits from the date in which it commenced to carry on such trade to the end of its first accounting period. So it means that for the first year, you will need to know the date of commencement. So you will know for two things here. You will know date of commencement, DOC. You have to know that. Then you will know the account year end. So it is from the date of commencement to the first accounting year end. That is where the first period is stated. So it means that if a company commences business, let's say in January 1, and the account year end is December 31st. So it means that it will be from January 1, let's say X1, to 31st December X1. If it commences business in July 1 and it decides to use 31st December as its accounting year, it's going to be 0107X1 to 31st 12 X1, meaning it's going to be just 6 months. So you see why the first year is abnormal. Now, for the second year, the assessable profit shall be the profit from the first day after its first accounting period. Sorry, I'll clean that. It will be shall be the profit from the first day after its first accounting period. What's happening? After its first accounting period to the end of its second accounting period. To the end of its second accounting period. What do we mean here? Now it means that this is where the first accounting period ends. The second one will start from where this one stops. It's going to be normal. So it's going to be January 1, X2, down to 31st 12, X2. So you see, it is not a difficult thing to learn. Now let's look at the third year. Now, for the third year and for each subsequent year, the assessable profit shall be the profit from the day after the accounting period just ended. So it means that for the third day, year, is going to be where this one stops, going to be 0101 X3 to the third accounting period. And it now says here that fourth and subsequent year, the preceding year rule shall apply. So from the fourth year, that is when we strictly say that the preceding year basis is applying. Now let us see an example here. XYZ Limited commenced business on March 1 and makes up its accounts to October 31st each year. Now we are told to state the relevant year of assessment and the profit. State the relevant assessment year and the profits to be assessed. So what it means is that They are telling you state the year of assessment and the basis period. So this is the date of commencement. For the first year, I will come here and I will say first year. The first year, the year of assessment, let's leave it for now. Now, what is the basis period? The basis period will be from the date the business commenced, which is March 1, 2020. And when is it going to end? This is where they make up the account. 31st October. October is 10, 2020. Now, always do this. For the first year, start writing your basis period. Leave the year of assessment. Start with your basis period. Leave the year of assessment blank. Now, it is easy that way. You know your date of commencement. Just slot it at the beginning of the defined period. You know where they make the account up to. Put it there. Now, when it comes to year of assessment, look at the year end. This is 2020, right? It must be preceding year basis. So here will become 2021. So this is the first year, 2021. And it is the basis period you've written. So I said always write for the first year, start with the basis period because it is easy to do. You know the date the business commenced, you know the date the account is made up. So start with that. Then looking at it as preceding year basis. That means it is in the next year that they will assess them to tax. Now, let's look at illustration 2. In illustration 2, we are asked that XYZ Limited commenced business on April 1. So this is your date of commencement and makes up account. So this is account year end, 30th November. Determine the basis period for the first 4 years. We'll do it here. And I'll say you will start. This is first, second, third, and fourth. Of course, this is your year of assessment. This is your basis period. For the first one, start with the basis period. That's the trick. You start with April 1, 2020, right? And it will end in 30th of November 2020. Now, if you look at it, this is 2020. That makes the year of assessment to be 2021. Now, after doing that, because they told you the first 4 years, this is 2021, so this must be 2022. This must be 2023, and this must be 2024. Now, the second one will always start where the first one ends. So this has ended in November, isn't it? So here will be 1st of December 2020, and it will be one full year. So the ending will always be rhyming. So here will be 30th November 2021. Of course, here will always be December 1. This is 2021. This will be 30th of November 2022. And here will be December 2022 to 30th of November 2023. That is how you do. So that's what corresponds to all of this. So this is year of assessment. This is the basis period. You can see that it is only the first period that has from April. This is less than 12 months. So this is less than 12 months. So it is abnormal. But all this is 12, this is 12, and this is 12. So you can see the constant ending in each of them. That's one thing you should know. They must end in a constant year end. That's why they say they make up the account to 30th November. But for year 2, 3, and 4, they have constant beginning. But in year 1, they cannot have the same beginning because year 1 did not start in December, it started in April. So that's it. So we have seen how to make up basis period. So you can see here that we are told that the preceding year basis really starts counting from year 4. Normally, we are seeing that everything here is preceding year basis, but the abnormality ends. If there is abnormality that has entered year 2 and maybe perhaps entered year 3, it will end in year 3. Preceding year basis will always be seen from year 4. Now, the reason for this abnormality seen to end in year 3 or so is because of the previous regime where we have a different kind of accounting rules or taxation rules for the commencement of business, which I will not go into now. This, what we're telling you now, is what is obtainable from 2020 year of assessment. This is because of the Finance Act 2019. This rule came into being from February 1, 2020, where the Finance Act 2019 took effect. And that is what I'll be teaching you on. We will disregard the previous rule for now. Until when you are familiar with this, then we can play with the previous rule because this is 2021, then 2020 it start this new rule started in 2020. We are in 2025. This is about 5 years or so. So you may be dealing with some accounts that are more than 5 years. So you might see account that started from the old rule entered into the new rule. We will talk about that later. So now we have seen commencement of business. We've seen how the first year is determined. I told us the first year, just look at the date the business commenced, look at the account year end. You have gotten the first and the last date. Now look at the end year for the accounting year end. Then look 1 year ahead. That will be the year of assessment. Then the second year will be the natural second year after the first year. The basis period will be from the next day where the first accounting period ends, and it will end in the second accounting year end. And that's where you work your way to all other ones. So now, take note of this. The ascertainment of the end of the first accounting period. The ascertainment of the end of the first accounting period is the key. Is key. Is key. End of the first accounting period is key in determining the basis period and the first year of assessment. Now, the first accounting period begins from the commencement of business to the end of its first accounting year. That's reinforced what I've been saying. In a situation where a company prepares the audited financial statement for a period shorter or longer than the first accounting period, The assessable profit for the first year will be determined on pro rata basis. Now let's see what they are saying here. Orion Limited was incorporated. Now this word should not throw you off balance. Incorporated. This is the date that CAC stamped and released the ROC number of the company. Now, it doesn't mean that the business must start that time. But in fact, that is the date the business was given birth to. It's just like saying someone was given birth to. That will not be the date that child will start going to school. So the date of incorporation is the date the business was given birth to. And the date of commencement is like the day it went to school. So it's incorporated in December 2018. It is not important. So this date is not important. And commenced business on October 1, 2019. So this is our date of commencement. The first set of financial statements prepared by the company covered a period of 15 months. That is October 1, 2019 to December 31st, 2020. So you see something here. Let's look at it critically. This is 2019. This is 2019. We have October to December. Then we have 2020. We have January to December. So instead of the company preparing for just October 2019 to December 2019, it prepared up to December 2020, making it 15 months. Now we are told, ascertain the relevant basis period and the assessable profit for the relevant years of assessment. Now you are seeing here that ascertainment of the basis period is as follows. Now, look at what they did here. Let's do it together again. We said it was how much here? 3 million. Okay, so let's say this is our year of assessment. Let me write the year of assessment here. Year of assessment. And let me come here to the basis period, then assessable profit. I told us to leave the basis period first and the assessable year of assessment first. So come back here. They began the business when October 1, 2019. October 1, 2019. 2019. This will end in December 31, 2019. Right? Okay. This will end in December 31st, 2019. That should be your first year of assessment. Now, the company, because they can't be doing financial audit for just 3 months, they decided to do the financial audit for 15 months so that they will not be spending too much. How can they just do for 3 months? Then they will come and do another one for 12 months. So they decided to do the first one 15 months. So subsequently, they will be doing 12 months. It's fine. But now, looking at this is 2019. This is 2019. Right? What will be your basis of, what will be your year of assessment? From what I was teaching you, your year of assessment is supposed to be 2020. Right? Sorry, it's supposed to be 2020. Right? We'll come back to this. and I'll explain something. So suffice it to say now that this is 2020 because the accounting year ends in 2019. That's fine for now. I will revisit the year of assessment. What will be your assessable profits? This is just 3 months. So we are going to be doing 3 over 15 because they give us 15 months times 3 million. So let's bring our calculator. So you say 3 divided by 15 times 3 million. That will give you 600,000. So that is this 600,000. So this is the account here. But now,
sorry,
let's
cut you off. Sorry. Please, can you scroll a bit back up to the question? I think you're quite a bit fast. I mean,
okay.
just so that, yeah.
All right.
Yeah.
So looking at the question again, Oron Limited was incorporated in December 2018. That's not important. Commenced business on October 1, 2019. And I said, this is 2019. I said, when you want to determine your first year basis period, you start from when the business was commencing, October 1, 2019. They prepare the accounts to December 31st, 2020. Normally, and this is 15 months. It's not supposed to be more than 12 months. So if they can prepare it to December 2020, what happened to December 2019? So it means that they should have done it to December was here, which is 2019, December. Now, December is 15 months, but we said it's going to be on pro rata basis. October 1, 2019, they're supposed to end in December 31st, 2019. This is just 3 months. So they're going to prorate this 3 million instead of giving it, instead of making this first one to be 15 months, they're going to make it 3 months. And they're going to take 3 months portion out of this 15 months period. So 3 over 15 times 3 million gives you 600,000. We will come back to this year of assessment. Just leave it. Then the next one is supposed to be January 1, 2020 to what? 31st December 2020, right? From what I was teaching you before, this is supposed to be 2021, isn't it? We'll come back to that. All right. So, what would that be? This is going to be 12 months. So, this 12 months is going to be 12 over 15 times 3 million. So, let's look at our calculator here. 12 divided by 15 times 3 million. That gives us 2.4 million. 2.4 million. So you see here, if you add this 600 to this 2.4, you have your 3 million. Excuse me. Now, let's revisit the year of assessment. So I will do it here again. Revise. Now, for companies, when the Finance Act 2019 was being formulated, when the Finance Act 2019 was being formulated, it was supposed to start in 2020 year of assessment. So your Finance Act 2019 started in year of assessment 2020. That's the thing you should know. So that's one. So it means that any account before to any year of assessment before 2020 doesn't fall in this Finance Act 2019. So that means that your basis period, any basis period that is in 2019 falls in the old accounting period, old regime. And in the old regime, what we do is the first year is always done on actual year basis. And it must be from the date the business commenced. And it doesn't care where the end of the accounting year is. If the accounting year is ending in July, if the accounting year ends in November, if it ends in March, it doesn't care. It will start from when the business commences and it will end. It will end on 31st December. So in the old regime, we only just take when the business commences. And we don't care when the business ends. We just look at 31st December. And incidentally, the business commenced here in October 1, and we said, okay, it's going to be end of December, and it corresponds with it. But we said it's going to be actual year basis. So that's why we are having 2019 here. Now, for 2020, the business is going to start from the date of commencement. So now the second year, the business is going to start from the date of commencement. The date of commencement, which is what? Which is, let me write it here. The date of commencement, which is which is October 1, 2019, is supposed to, I'm just telling you how the old regime works. The first year and the second year always have the same starting date. The first year will start when the business commences. The second year will still start when the business commences. But the difference between the first year and the second year is this. The first year will always end in 31st December. Whether the account is 1 month or it's 12 months or it's 11 months, doesn't matter. It doesn't matter where its account year end is. It can exceed the account year end, but it must end in December 31st. The second year, it doesn't matter where the business accounting year end is. It must be complete 12 months from the date it starts. So it means here that if the business started in October 1, 2019, it must end in September 30, 2020. So this is supposed to be our 2020 year of assessment. But hold on a minute. In 2020 year of assessment, Finance Act have started. Finance Act have started, and for companies, it says it
Hello,
must
Mr. Chima.
end. Yes.
Why is year 20? I'm not getting, I'm
That's what I'm
getting
explaining.
confused.
I want to explain it to
Okay.
you. You went ahead of me. So let me explain again. You see why I didn't put it in here and I was explaining it here. We understand 2019 that in the old regime, the Since 2019 is outside the new Finance Act 2019, which started from 2020 year of assessment, it is the old regime. So I'll just put here old or put here old. Now, in the old regime, the first year of a business must reflect that year. The year of assessment for that year of business, the year the business started is in October 2019. That is the same year of assessment. And the basis period will be from the date the business started. It doesn't matter where the accounting year ends. It will end in 31st December of that same year. Right? That's fine. Now, the second year, which is now 2020, it will start again. It's as if they want to press reset button. It will also start from the date the business commenced, which is October 1, 2019. But this time, instead of ending in 31st December, you will have to count 12 full calendar months. So it's supposed to end in 30th September 2020. Now, this would have been correct if we are still using the old law. That is, if Finance Act 2019 has not come into place. So Finance Act 2019 started in 2020, and this makes it new. Now, now, the Finance Act 2019 states that all companies are to be assessed to tax on preceding year basis, never on actual year basis, and there will be no overlap. So now look at it now. This is 2020, right? Which is the second year. Let's do something here. This is 2020. This is another one. This is the new one. Now, if we look at 2020, it means that the account, since it is preceding year basis, normally the account should end in December 31, 2019, isn't it? And it's supposed to start 12 months, but there's no 12 months. So that means it's still going to be from October 1, 2019. So if you look at this now, this and this are the same. And there is no overlapping, no gap in Finance Act 2019. Now, this October 1, 2019 to December 31, 2019.
Sorry, Chima, sorry. Yeah, you just said two things. You said if we were assessing 20.
Yes, if we are assessing 2020, yes. I'm losing you. I'm not hearing you. Okay, let me take it again, since I'm not hearing you.
Get it, scrap it, sorry. I think I was confused. Can you
Okay, let
make
me take
it?
it again.
Yeah.
Let me take it again. Looking at 2020, if this, assuming that Finance Act 2019 did not come into effect, this is how it will look like in the account. So this would have been the case in the account. But now, Finance Act 2019 came in, and there will be no overlap and there will be no gap. So looking at 2019, looking at 2020, if 2020 is being considered, what will be the basis period? It must be an account ending in 2019. 2019 has already been covered here in this one here, in this 2019 year of assessment. This 2019 year of so here, this supposed to now be 2019. This old 2019 has already taken the basis period ending in 2019.
That's
So
based on
look
the
at
old
20,
regime, right?
yes, based on the old regime, it has already taken that slot. So 2020 has no basis anymore, because if it is going to be looking at preceding year basis, it has been taken care of. So that's why it is dash. So if you look at it, as what I was explaining here, it is still the same period which has been taken care of, and there is no overlap, because this is an overlap of this. So instead of having overlap, it's going to be dash. And so this is 2019, 2020. The next one should be 2021. 2021 will take where this one stopped, which is this, and end in 2020. So that's what we are seeing here. So this is 2019. This is the old. This is how it is being done in the old. This is how it is being calculated in the old. This is the new 2020. It has no basis to stand, because if it is going to be PYB, it is going to be PYB. It has already been taken care of in 2019. So it's going to be dash. So 2021 is new and is still PYB. It's going to be looking at an account ending in 2020, which we have January 1 to December 31st, 2020. And it is going to be assessed in 2021. 2020 has nothing, because it's supposed to be assessing accounts ending in 2019, and 2019 has been taken care of in the first. So that's why 2020 has nothing.
Okay.
I don't know if this understood.
Yeah,
Due
sorry, what
to
if it's a situation whereby the year was first year was 2020 and they still calculated 15 months, just like we've seen.
if the basis period is October 1, 2020,
Yeah.
your year of assessment will be 2021.
No. I mean, say they started the business in 2020 instead of 2019, right? To
If
31st
they started the business in 2020,
20.
yes,
I'm sorry, let me just finish.
okay,
October
so if this year,
2020
if this
to say
like this, right?
31st 2021 to 31st December 2021.
I don't get that. Okay, if they bring the accounting period, that's 15 months to be
Yes, still till
date,
2021. Yeah,
31st December
2021.
2021. So the first year will be October 1,
1, 2,
2020 to December 31st,
20.
2020. And the year of assessment will be 2021. The second
Okay.
one will be 1st of January 2021 to 31st of December 2021. The year of assessment will be 2022.
Okay, so we are not doing October 1st to September and the following year. I thought,
No. This is because it is on the new Finance Act. You need to know when the new Finance Act takes effect. This is because this example given here, it has an overlap with the old regime, and also sharing a border with the new regime. If any business is having this kind of complexity, you should know that this one, that's why I put old here, old regime. We treat it the way the old regime is being treated. But if it were to be 2020, everything would have been new regime, and we would have followed it the way it is. No worry, when you will see some questions like that, and we'll show you how, by the time you practice it enough, you'll see that. All right, let's look at the explanation here. Arising up from the above, the company did not have any assessment period profit for 2020. Hence, it will not pay company income tax. Given the provisions of the Finance Act, the first year of assessment, which is 2019, falls under the old provision, which is treated this way. The implication of the above revised commencement rule are elimination of the complexity surrounding taxation of new companies, the risk of subjecting profit of a new company to tax twice is eliminated, because normally in the old law, here and here have overlap, and they are being subjected to tax twice. In some cases, one period is subjected to tax three times. So you can imagine, and that's why some people usually want to make the first 3 years of their business to experience loss to avoid some of those things. Now, this implies that overlapping basis period has been eliminated, and now assessment of new companies are now based on prior or preceding year basis. No more actual year basis. So if you can remember here, this one was actual year basis.
Mm.
So, but no more actual year basis. So 2019 account was based on actual year basis, nothing in 2020, because this account here ending in 2020 belongs to 2021 year of assessment. So it means there is no profit for 2020 and there is no tax. So far, so good. We have been able to see assessments of um, accounts that are in the commencement of business. I will jump now to see if I can see questions on commencement of business so that we can do something on that. Let's see whether we can see any one. Let me come back here. Okay, let's come back here. Coming. Let's see a question that has to do with commencement of business. Just a moment, we're looking for question. Are they saying the same thing? Okay. This Orion Limited was incorporated in is still the same thing that we are giving. Okay, so I will need to look for a question later that has commencement of business. We need to look for a question that has commencement of business and solve that. So, but let's go into cessation of business so that by the time we see a question, we will understand both commencement and cessation for today's lecture. All right. So the takeaways for commencement of business, the takeaway here is that summary, commencement, So first year, start from date of commencement to excuse me, first accounting year end. Second year will be one day after first account year end to second account year end. Third year equals to one day after second account year end to third account year end. So from fourth year, it is one day after the previous account year end to next account year end. And all of these are going to be on preceding year basis. So this is for the provision of Finance Act 2019. Everything is going to be on preceding year basis, nothing on actual year basis. And this must start in year of assessment 2020. So the Finance Act started in year of assessment 2020. That is what you should know. 2020, the cutoff date. 2019, that's old accounting rules. Now, looking at cessation of business, this is the second C. With the implementation of Finance Act 2019, effective 2020 year of assessment, the assessable profit of a company ceasing to carry on business is the amount of the profit from the beginning of the accounting period to the date of cessation, and the tax thereof shall be payable within 6 months from the date of cessation. Now, what it means is this: a company date of cessation, date of CS, that's cessation, let's say it's December 31st, right? Let's say it's December 31st, 2023. And let's say the company's account year end is also December 31st, 2023. It means that the accounting period would have started from January 1, 2023 to December 31st, 2023. This will be year of assessment 2024, right? Now, this tax is payable 6 months after this date. So 6 months after this date is June 30, 2024. Now, this is also an important date that determines the year of assessment. Now, we will come to that when we are looking at question. In the previous regime, there used to be something called penultimate year and ultimate year. These terms are no longer used. Penultimate year is the year
It's just been
before.
explaining me.
Sorry?
I don't know. No, that time when I called you, I know one part of it was paining me, but I slept after a while because I worked today, but because we didn't work throughout, we only did trainings because
Sorry,
of
are
the
you?
go live.
Yes, are you? Oh, okay, sorry. Now, the penultimate year is the year before cessation. I will put CS as cessation. Penultimate year is the year before cessation, and the ultimate year is the year of cessation. Now, there is something we usually do in penultimate year. In penultimate year, in the old regime, we usually do PYB and AYB. When we do PYB and AYB, we choose the higher. That was what is being done in penultimate year. But in the coming of Finance Act 2019, this is no longer appropriate. Now, in ultimate year is usually done in AYB. This is also no longer applicable because you cannot do any company income tax assessment on actual basis. And so the penultimate and ultimate year provision have been dispensed with. Where a company permanently ceases to carry on trade or business in an accounting period, its assessable profit shall be the amount of profit from the beginning of the accounting period to the date of cessation for that period. And the tax shall be due for payment. Excuse me. The tax shall be due for payment within 6 months from the date of cessation. Why is it 6 months? This is because normally your company is normally filing its tax. Their taxes is normally due 6 months after the end of the accounting year period. In the case of cessation, the cessation date now overshadows the end of the accounting year period. And so it is due 6 months after the end of the cessation date. Now, that is a very important thing here in the sense that that 6 months due date determines the accounting year end. Now, arising from this above, a company that ceases business between January 1 and June 30 in a particular year will file its returns and pay tax in that year of cessation. Whereas a company that ceases business between July 1 and December 31 will file their tax returns in the following year. Why is this so? This is because, let's look at January 1 now. If a business ceases in January 1, 6 months to January 1 will be June 1. Assuming this is January 31st, 6 months will be June 30th. Sorry, it will be July 30th. Sorry, July, no, 30th. Cease on June 30th. If it ceases on June 30th, 6 months will be December 31 of the same year. That's why we say if the business ceases between January 1 to June 30, they will still file their cessation within the year. But if it is July 1 that the business ceases, 6 months will be January 1 the following year. So you see, if it ceases in July 1, you are filing in the next year. If it is July 31st, you are filing January 31st. So that's the implication. All right, let's look at this question now. ATAX Nigeria Limited was incorporated in 1990. Ceased operation on March 1, 2020. This falls in the Finance Act. So you see here, this is our date of cessation. Date of cessation. Having been in business over 25 years, the accounting year end of the company is 31st December annually. So this is your account year end. Required. Determine the relevant years of assessment and due date of payments. Now, we will look at the date of cessation. This date of cessation will determine the relevant year of assessment. Now, this date of cessation was in March 31st, 2020. So let's do something here. March 31st, 2020, right? So we have March 31st, 2020, right? Now, for a business that is a company year end is 31st December, that means this period must have started from January 1, 2020, isn't it? Now, if this is March 31st, 2020, started in January 1, 2020. Now, what is the year of assessment? To determine the year of assessment, we must look at the due date of payment of tax. Payment of tax. Let's look at 6 months. So now plus 6 months. 6 months to March. March, we have April, May, June, July, August, September. So this is September 30, 2020. So because it is September 30, 2020, the year of assessment is 2020. Now that is it now. Now, before this starts, that is, this one is, they call it cessation filing. It must have done its preceding year basis filing in 2020 because look at it again. This is January 1, 2020. There's another account that is 31st December 2019, which will have started from January 1, 2019. And since it is 2019, the year of assessment is still 2020. So there are two taxes that are being filed in 2020. One of them is preceding year basis, full 12 months. And the due date is you pay it in June 2020. It is because of this payment in June 2020, that is why this is 2020 year of assessment. Then this one again is being paid in 2020. That is why it is still in 2020 year of assessment. So you see here, there are two payments being paid in 2020. One of them is 12 full months that started from January 1, 2019. Now, do not be confused that why is 2019 being paid in 2020? Because the year of assessment, Finance Act 2019 started in year of assessment 2020, and we are dealing in year of assessment 2020. This is the basis period looking back in 2019. Now, this is PYB, 12 full months. But because it is ending in March 2020, this one was, assuming it was not going to end, this one was supposed to be 2021 year of assessment, right? Assuming there was no cessation, it would have ended in December 2021. But because it ended in March 2020, it is less than 12 months. How do we determine this year of assessment? We look at 6 months after this date. If it falls in 2020, it is also 2020 year of assessment. So that's how we get to determine this. Now let's look at this same scenario here. Given the same scenario, assuming the company sees in August 31, 2020. Now, the first year of assessment here is still the same thing. 1st of January to December 31st, 2019. The same thing here goes here, the same period, the same due date is in June. It is because of this 2020 year of assessment that they are paying the tax. That is why this is 2020. And now it is because this is 2020, 6 months, that is why this is 2020. Now this began in January 1, the same period, but now this one is ending in August. Now add 6 months from August, September, October, November, December, January, February 2021, February 28, 2021. So because this is 2021, this is now 2021 year of assessment. So that's how to understand it. So for cessation period, it is the due date of payment of tax that determines the year of assessment. So it means that after writing year of assessment, basis period, the due date of payment of tax should also have a column so that you use it to determine the year of assessment. All right. Then receipts and payments after the cessation date. Where a company which has permanently ceased to carry on trade or business subsequently receives or pays any sum which would have been included in or deducted from the profit of that trade, had it been that money had been received or paid before the cessation date, such money either received or paid is treated as though it was received or paid on the date of cessation. So normally a business ends in August 31st, and maybe December you now receive money, which is like how many months? Like 4 months after the business ended. That money is looked at as though it was received in that date the business ended. Now, if you are owing somebody, maybe you have written maybe maybe the person paid you money, the person was owing you paid you money. It was like a bad debt before, and you now receive money. You take it as though you have received it on the date of cessation. And if there was somebody you're supposed to pay, and you didn't pay the person, and you paid later, it is taken as though it has been paid on the date of cessation. Now look at this business here, Agbadiala Limited, a once booming enterprise due to mismanagement of funds went into liquidation on what date? On 30, 30th of September 2017. This is the date of cessation. Now the company's return, financial return of the company prior to this date are as follows. So this is the year ended 2014. So this is supposed to be, let me put year of assessment here. This is supposed to be 2015. This is supposed to be 2016. This is supposed to be 2017. And now this is ending here in 2017. So 6 months after October, September, October, November, December, January, February, March. So this one will give you March 2018. And that's what makes it 2018 year of assessment. Okay? What am I doing? Okay? Now, additional information. On October 1, 2009, well, I don't think it's 2009, 2019. It's 2019 they meant. The liquidator received 20,000 written off as bad debts at the end of 2014. So this 20,000 had been written off in 2014 year of assessment as bad debt. So accounting year, that is 2015 year of assessment, accounting year 2014, 20,000 that was written off as bad debts. They now got payment of 20,000. Also, the liquidator paid rent due 40,000 at the end of 2015 in that same year. So at the end of 2015, there's a rent due that was not paid. They now paid it on this date. They now said, compute the assessable profit for all available years of assessment. So if you look at it now, look at 2015 year of assessment. Basis period is this 2014, and it is still 9 million. No doubt about that. Now, the business ended when? Business ended, okay, I should have been thinking of something. This is not Finance Act 2019 rule. This is the old rule. So for the year the business is ending, that year is going to be on AYB. So this is going to be 2017. Then the year before, we'll have what they call penultimate. Penultimate year, it is 2016. It will be treated in PYB and AYB. So 2016 is the penultimate year. So look at what happened. 2015, we have our normal 9 million as given. 2016 is penultimate. penultimate year. So they are going to treat this one here as PYB and this one as AYB. So for PYB, where this one stopped, December 31st, 2014, to start from January 1, 2015, one full year to December. Okay, so how much is that? This one they said year ended 2015, and that is it, 700,000. But this is year ended 2015, 700,000. Now, we'll also treat AYB. AYB, since this is 2016, it must be actual year basis. January 1, 2016 to 31st December 2016. So let's look at an account that ends in December 2016, 540. So it is this 540. They will not look at this. You will not choose the higher. You will not choose the higher of the two. So this one is the higher. That is why it gets chosen. This one is not chosen. Then for the 2017, which is the actual year basis, they're going to be taking January 1 to September 30th. So that's what they did here, January 1 to September 30th. So how would they get January 1? January 1 can be found here. Okay, because this is ending in December 31st. So January 1 to December, this actual year 2017. So that's the 360. So that's the 360. Supposed to be 360 and not 340, except maybe the next 340 year. Okay. So but what happened now is this is supposed to be 360. But let's see why it is 340. Normally we have 360 there, right? Now they now add that debt. That debt is as though it is received on this date. So 360 plus 20 becomes 380. They now paid rent 40. 380 minus 40 becomes 340. That is why we have this 340 here. So it means that all those adjustments have been adjusted right here in the. So let's just talk about this one so that we know that we are done with this page. Provisions of excuse me, provisions of Finance Act 2019 on business sold or transferred. With the implementation of Finance Act 2019, which went into effect 2020 year of assessment, where a company is sold or transferred to another related company. So the emphasis is on related company. If it is sold or transferred to a related company, there will be no application of commencement and cessation rules. When they say related company, they are doing, for example, a bank, let's say you Access Bank and Intercontinental Bank. Intercontinental Bank was sold to Access Bank or it was transferred to Access Bank. There will be no commencement rule or cessation rule because they are the same business or related business. If they are not related, then we'll talk about the cessation rule and the commencement rule. The Finance Act 2019 introduced the following: qualification for exemption from commencement and cessation rule in a business restructuring amongst related parties require that they should be related for a period of at least 1 year prior to the restructuring. No disposal of assets post restructuring until after 1 year. No value added tax and capital gains tax on disposal of assets amongst related parties in a business restructuring, and exemptions will be withdrawn if disposals are made within 1 year of restructuring. So this point is just for your notes. This point is just for you to note. Most times, I've not seen questions coming from this point, but it's good for you to note this point. So in case a question comes out and they are talking about related business, you should remember this point. So I'll just come here, related business. So what is our take away for this topic? Part one. So we've just done, so I'll write here, this is end of part one, so that we will understand from our next class. So this is end of part one. So we are taking commencement and cessation of business. And we said before we got to commencement and cessation of business, we were talking about basis period, we are talking about government fiscal year and accounting year end. We talked about the year of assessment and basis period, which is going to be preceding year basis. We talked about normal basis period having three characteristics. It must be 12 full months. It must start where the previous one and 1 day after the previous month, after the previous accounting year. And excuse me, it must be the only account or the only period ending in the preceding year. And we talked about 2 out of the 3 abnormal situations. I call them the 3 C's. We are taking 2 C's. The first one is commencement. Let me call it CM. I call it commencement. Sorry, something is holding me. Call it CM. First one is CM. So this is commencement. This one is cessation. The next one, which is going to be change of accounting date, is going to be called CH. So we use code names for them. We saw the commencement rule, the old year, the old regime, and the new regime. We are focusing our attention mostly on the new Finance Act, which began in 2020 year of assessment. We saw the cessation and we saw something that is significant. The due date for payment of tax is 6 months after the date of cessation, and that determines the basis, the year of assessment. So, in our next class, that's why I said this class will be divided into 2. After looking at the change of accounting dates, we'll also go into past questions to see um, how these are being applied. So if you have any question, now is a good time to lay bare your question and let's see how we can treat it. So any questions so far? I want to believe no questions so far. So at this point, I want to thank you so much for honoring the invitation to come to class. And I do hope that this lecture will serve you well and make you pass your exams. So once again, I will say good night. If you have any questions, feel free to contact me privately and I'll be glad to answer you. Once again, my name is Chima and I'm signing out from the class. Have a nice day.